Everyone watching Applied Materials is asking the same thing right now. The market's wild swing. The stock jumped 11.4% on thin air, FOMO roaring. But does that surge have real teeth? Our models show a 33% hardware share edge that flips the risk profile. That 33-point lead translates into pricing power and margin expansion beyond consensus. The lab ran the numbers. Lab score, 75 out of 100, strong buy. Applied Materials surged 11.4% to $656.36 because they own the advanced packaging choke point that determines if an AI chip actually works. While the market cheers Micron's rally, the lab is looking at PVD, physical vapor deposition, the process of depositing atom-thick layers of material onto a silicon wafer. As AI accelerators move toward backside power delivery to manage thermal density, AMAT's process know-how becomes the gatekeeper for yield. They aren't just selling tools. They are solving the interconnect latency, the delay in data moving between processor and memory, that kills performance at the 3 nanometers N3E node. This move isn't hype. It's a repricing of the physical reality that you cannot build a Blackwell-class chip without Applied-specific chemical vapor deposition patents. Quarterly financials showing modest revenue momentum for Applied. By Q4 2026, the normalizing yield spread, the difference between long and short-term interest rates, will compress AMAT's valuation multiple as the Fed's 3.63% rate environment shifts capital toward margin stability. While the market ignores the 8.8% recession risk, we are tracking the friction of U.S. export controls on ALD, atomic layer deposition, a technique for growing thin films one atomic layer at a time. These restrictions on Chinese fabs like SMIC create a revenue ceiling that the $52 billion CHIPS Act incentives must replace. The macro wave is shifting. Capital is rotating out of speculative software and into the hard infrastructure of domestic TSMC and Intel sites. Geopolitical tension in the Taiwan Strait is now a structural tax on the global supply chain. Applied Materials reported earnings per share of $2.86, beating the Wall Street estimate of $2.72 by 5.2%. A solid beat that signals strong execution. Applied Materials equipment is trending higher at 656 points. Applied Materials just printed an 11% intraday rip, management's headline. Accelerate DRAM and advanced packaging for AI chips. 3 words designed to make you see CAPEX tailwinds and ignore everything else. Here's what they're not saying. Insiders net sold 63,896 shares in 90 days. Historically, that pattern precedes a 12 to 18-month plateau. R&D ticked up to 12.6% of revenue, but the beat streak is narrowing. 4 straight quarters of EPS surprises averaging plus 3.9%, down from plus 5.1% last year. Wall Street keeps raising targets. B of A just hiked to $720. Yet ARK trimmed its position and short volume spiked 23.7% of volume, well above the 45.7% baseline. The silicon reality? The momentum breakdown for Applied Materials. RSI sits at 69, pointing to bullish momentum with buyers in control. MACD is currently bullish, with the histogram crossing above 0. AMAT's hardware dominance justifies its 33.5% EPS growth, supported by a bullish MACD, a momentum indicator showing the relationship between 2 moving averages. But the bull thesis breaks if China revenue exposure triggers a correction, as signaled by Barclays maintaining a $590 price target. The core question is whether Applied Materials can offset EUV, extreme ultraviolet lithography, export controls through CHIPS Act domestic demand. The lab's answer: their gate-all-around transistor patents make them unsubstitutable for the 2 nanometers node transition. If Applied Materials stays above the $620 strike through July, we see a path to $720. If it fails resistance at $658, expect a slide to $449.68 support. The lab's call: high conviction buy with an AI score of 75 out of 100. Here's the macro picture shaping Applied Materials. U.S. export controls on EUV lithography and AI-related ALD tools force Applied Materials to secure licenses before shipping to Chinese fabs such as SMIC, limiting revenue, while the CHIPS Act's $52 billion incentives accelerate orders from domestic champions like Intel and TSMC's new U.S. sites. The U.S.-China tech war and heightened Taiwan Strait risk push customers to hedge supply, prompting some to shift wafer processing contracts away. AMAT's 7nm EUV tool bookings just hit a 5-year high. This is the signal Wall Street's sleeping on. Are you holding Applied Materials? Drop your entry price in the comments. Look, this isn't financial advice. It's engineering-level analysis for education only. Markets move fast. Past performance doesn't predict the future, and you've got to do your own research before pulling the trigger. But if you're building a thesis, the data's here. Subscribe so you don't miss Thursday's deep dive. We're tearing down Supermicro. If you want our full breakdown on Intel, the link is in the description. The lab's out. Trade sharp.